7 more worst crypto mistakes that you must avoid. Anyone with an internet connection, a smartphone or computer, and a small amount of beginning cash may theoretically become a trader in the cryptocurrency market. Unfortunately, the majority of these newcomers learn difficult lessons and lose money by making mistakes that could have been avoided, if only they knew what I'm about to tell you. In our previous video, we talked about 5 of the worst crypto mistakes that you must avoid. However, in this video, we will cover 7 more mistakes that you need to watch out for. Let's dive right in. Putting all your money into one coin. In the previous video, we talked about how some people make the mistake of putting all their money in one go. Furthermore, many people make the mistake of putting all their money onto one coin. This is dangerous strategy. You may believe that investing in cryptocurrency is dangerous in and of itself. True, but you should endeavour to mitigate your risk to the greatest extent feasible. When you put all of your money into a single cryptocurrency, you are completely depending on it. You will lose the majority of your money if the cryptocurrency fails or if the price falls dramatically. You won't have any more coins to make up for your losses. Spreading your capital over numerous cryptos is a superior strategy. Put part of your money into stable coins, which have been around for a while and have a proven track record. For the remaining funds, you can take larger risks and invest in currencies that you believe will appreciate quickly. Avoid picking the one fortunate coin that would make you a millionaire overnight. It can also cause you to lose everything in an instant. Divide your funds across many cryptocurrencies and purchase them in stages. Trying to time the market. One of the most common mistakes made by investors is attempting to time the market. They believe that they can acquire coins at a cheap price and sell just when the price begins to plummet. One of the reasons why individuals keep an eye on the price chart during the waking hours is because of this. The majority of those who try to forecast coin price movements lose money. It is a basic reality that no one, especially retail investors like ourselves, can time the market properly. The only individuals who can predict the market are those with inside information or whales. Because of their massive holdings, whales can manipulate the market. Average investors do not have access to insider information or a high enough volume to influence the direction of the coin price. To purchase or sell the coin, choose a price objective. Take action if the target is struck. If you're employing leverage or a margin position, this is very crucial. Do not follow the market's lead and move your aim in the hopes of making the most money. The key to long-term success in crypto investing is sticking to the strategy. Lack of exit strategy. The majority of investors have no understanding of when it's time to sell their coins. The only thing they intend to do is sell when they can make the most money. However, they do not specify what the maximum amount would be. One of the greatest mistakes investors can make is failing to plan an exit strategy. As a result, they don't sell when the price rises because they expect it to climb much more. They also do not sell their coins when their value plummets. They are hoping that by waiting for the price to rise, they will be able to lessen their loss. Investors miss out on generating a profit or lowering their loss in either circumstance. They perform arbitrary acts on the spur of the movement due to a lack of planned investment. And if you base your exit plan on market volatility, you're gambling with your hard-earned cash. Always have a plan to get out of a situation. Know when it's time to cash in your investment. Always have a profit and loss goal price in mind. Sell your shares whenever you've reached your goal profit or loss amount in your portfolio. Falling for scams. Cloud multiplier scams. Victims are occasionally contacted by fraudsters through email or text with an investment opportunity. They claim to return double or triple the amount invested in Bitcoin to investors who deposit their money to a specific digital wallet. It's important to remember that free money offers should always be treated with caution. Spoofing. Criminals may easily inflate or deflate the price of relatively tiny or unknown cryptocurrencies by placing fictitious purchases or sell orders, sending the currency's value rising by hundreds of a percent at a time. When unknowing traders rush in to attempt to get a piece of the action, the crooks cancel orders that they never intended to fulfill in the first place, causing the price to fall in certain cases. Criminals may hold a large amount of cryptocurrency at any given moment through pre-mining, much of it before it's available to the general public. They can inflate the price by advertising it on social media and then selling it off at a higher price on crypto exchanges. After that, they vanish. Malicious wallet software. Stick with large brands in crypto wallets like Ledger, Trezor, Exodus, or MetaMask, according to the best crypto advice. Dodgy or unknown wallets on the Google Play Store or the App Store can use dodgy programming to steal your crypto assets. Fake coins. It's impossible to distinguish what's real and what's not with so many cryptocurrencies on the market. Criminals can steal your identity and, in certain cases, your hard-earned money if you buy in bogus coins. They accomplish this through phishing, in which they persuade you to click on links in emails that download malware onto your computer. Take no one's word for it and conduct your study using as many sources as possible. Investing more than you can afford. It's tempting to put all your money into cryptocurrency during a bull market when the gains are swift and furious. But keep in mind that this industry is still very new and quite volatile. Fast and furious style. We usually hear about the individuals who convert $1,000 into $100,000, but we seldom hear about the hundreds of others who lost a lot of money investing their last dollar. Alternatively, there are tens of thousands of individuals who can no longer afford a third or fourth Tesla. Don't put your groceries and rent money into Bitcoin unless you want to live on top ramen while you wait for the market to come around. Only put your money where you can afford to lose it. Investing only in crypto. When it comes to diversifying your portfolio, Bitcoin is fantastic, but it's equally necessary to diversify across asset classes. Stocks, bonds, and mutual funds are the most straightforward additional asset groups to evaluate. However, real estate may be a choice for others. Holy relics are the way to go for others. Here, the goal is to reduce your risk. Because cryptocurrencies are a famously volatile asset class, diversifying your portfolio may allow you to profit as the years progress. Not taking profits. Finally, one of the most common mistakes made by investors is failing to take profits. We become so happy when we watch our investments rise that we believe it will soar to the moon that we resolve not to take any gains. Then the price plummets. When you check your portfolio on some days, it has greatly risen, but on other days, it has significantly decreased. There is nothing wrong with profiting along the road in either direction. When you can, eliminate your initial investment as a profit-taking method. Because everyone's circumstance is different, you may opt to borrow even more money once you've met your financial objective. For example, if you aim to invest in crypto to make money so you can purchase a new house or pay off debt, you may want to sell enough crypto to meet your goal once it reaches a price that allows you to do so. Remember that the market does not continue up indefinitely, and the only way to profit in the long run is to sell. The blockchain and cryptocurrency sectors are experiencing a lot of great developments, and there is a resurgence in widespread interest in Bitcoin and other cryptocurrencies. That's fantastic to see. What's less positive are the errors, frauds, and crypto hacks that are occurring. I hope this video inspires you to learn more about cryptocurrencies and that you avoid these 3 frequent cryptocurrency rookie mistakes.